This video is a demonstration of how our Tesla model works. We're going to be updating our model to include the guidance given in management's last shareholder letter from the first quarter of 2015. If you're new to our modeling approach, it's consistent across all the different companies that we cover. In the upper left-hand corner, you can see the color legend, so anywhere that you see a blue cell, that represents our estimates. Those are numbers that you'd want to focus in on changing if you wanted to see what the impact on valuation would be. The purple cells represent company guidance, and the orange cells represent consensus estimates among Wall Street analysts, and our source of that information is Bloomberg. So the model starts with the earnings and the income statement, which we model on a non-GAAP basis, but we also have the GAAP historic details included. And this, anywhere you see this, again, is consensus estimates. So these are the final consensus non-GAAP EPS estimates for each of the next couple of quarters. We can freeze this here. And the way that we develop those earnings estimates are through the different segment details. So for Tesla, we have the Model S details, which you can expand here. Let's see vehicles produced, deliveries, quarter-on-quarter delivery growth, non-GAAP gross margin, all the different metrics that you would need for each one of their vehicles, really. You'll want to include Model X and Model 3 in the future periods. We also have service and other revenue and zero-emission vehicle credits. And then we have the new Tesla energy products. You can expand each of these to see where the estimates start coming in. We also have a balance sheet and cash flow statement model if you want to do the full financial statements. We'll collapse those for now. And then we get to our two valuation approaches. So our primary approach for Tesla is a multiple-based approach, and we're using the 26 consensus EPS estimates for our price earnings multiple. And you can also use a discounted cash flow if you'd like. This is a much more complicated approach, and if you'd like the details, you can visit our YouTube channel where we go into a detailed analysis of each one of these metrics. For now, we'll collapse that. And let's get back to the shareholder letter. So if you scroll down to the last section of the letter, management gives their outlook for the next quarter. And we've highlighted some of the key items that we wanted to incorporate into our model. So starting with the number of units produced, they expect to produce 12,500 vehicles, and they also plan to deliver 10,000 to 11,000 in the second quarter. So if you scroll down to our Model S section, you can see that we have produced 12,500 units, and then there's a little comment in there which explains where that number came from. And we decided to go with the high end of the delivery estimate, 11,000, and that was really a function of trying to get to the consensus revenue estimate for next quarter. If we found that if we went with 10,000 units, we wouldn't get to that estimate, and that also incorporates management's guidance of a slight decline in total price per unit. Now for the full year 2015, management estimates they will deliver approximately 55,000 Model S and X cars. So you can see that we have included 50,000 deliveries of Model S units, and if you expand our Model X estimates, we have put in an additional 5,000 vehicles there. So this is assuming that they're able to start the ramp of Model X by the fourth quarter of this year. For the second quarter, they expect to sell 15 million of regulatory credits, which we have included here. They even give us the details about how much of that would be the zero emission vehicle credit of 5 million. Expect non-GAAP automotive gross margin to be just under 25%, which we've included here, 24.95%. And expect service and other gross margin to be slightly better than break even. So if you expand the service and other revenue section of our model, you can see that we have just above break even. Basically no significant contribution to total gross margin for the second quarter. That's slightly better than a slight loss last quarter. Finally, they give some details about their expectations for capital expenditures for the full year, where they've estimated $1.5 billion. So if you're not modeling the cash flow statement, you really wouldn't care about that. But if you are, the number's right here. And again, it's purple to let you know that that's coming directly from their guidance. So we can collapse that again. So that's a basic overview. You can see we've incorporated all of management's estimates for the next quarter into our model. And where we don't have an estimate from management, we use the consensus estimate from the street. You can download this model for just $5 in our model store at gutenbergequityresearch.com and plug in your own estimates for model growth. If you want to see, maybe you want to see next year if they're able to deliver 150,000 vehicles between Model S and Model X, or if you think they might be able to ramp the Model 3 a bit earlier than expected, you can input those assumptions and see how earnings would change and how the valuation would change. Be sure to check back after they report this quarter to find the updated earnings and valuation model.